Good day and welcome to the Advanced Tax Training course. The focus of today's training will be to take you through the parts of the Income Tax Act that's specifically applicable to employees tax. We'll have a look at the main act, which will deal more with income tax on assessment, but it's important to understand certain of those concepts since it's drawn through to the fourth schedule, where we're going to have a look specifically at the taxation of employees on the payroll. Then we've got schedules to the Act. Now the Act has the main Act, which basically deals with income tax on assessment. Then there are schedules, and we're going to look at the fourth and the seventh schedules. Those schedules are basically addendums to the Act, giving more detail around specific things that need to happen. The fourth schedule tells us what needs to happen on employees tax on the payroll, and the seventh schedule specifically deals with fringe benefit taxation. After that, we have a look at regulations. Now, as we go through the material, you'll see that in certain places it says that the Commissioner can gazette or tell us how to act or what certain values are that we need to take into consideration when looking at employees tax. Now, those are gazetted by notices or regulations. Now, a notice or regulation is basically law as well, and we have to take that into consideration, such as the S&T limits or the tax tables are always in notices and regulations. Then, when there are areas in the Income Tax Act which are unclear or which are broad or which needs further interpretation, we further go and have a look at case law. Now, case law gives clarification on certain topics. It's not law, so it's not as strong as the Act, but it gives us a clear indication direction in terms of the interpretation of certain areas. After that, we can have a look at the interpretation notes and the practice notes that are issued by SARS. Now, these are not law. They are merely SARS's interpretation and suggested solution, basically, to specific sections of the Act. And we're going to have a look at some of those today as well. Lastly, we can refer to the SARS Employer's Guide, the EMP10. That, of course, is just a guide. It's not law. Again, it's SARS's interpretation and guidance on addressing specific issues. On page 2, you've got a comparison of income versus remuneration. Now, it's quite important to understand the difference between these two concepts. When we look at income, we look at the individual's total income from things like rental, dividends, interest, employment. So it's quite a big concept, and income is what we have a look at on assessment. So if you have a look at your table, you'll see we start with gross income. Under gross income, we've got specific inclusions such as annuities, fringe benefits, etc. Then we're going to have a look at exemptions from gross income, such as OID, UIF, uniform allowance. So those are things that I earn that are not taxable. That equals what we call income. Then we can, from that, deduct our deductions. So those are allowed deductions, such as our RA contributions, medical aid expenses, etc. And that leaves us eventually with taxable income. And taxable income is the final value on which SARS levies income tax at the end of the year on your assessment. We've got exactly the same picture on the right-hand side of that table when we have a look at remuneration. However, remuneration is specifically on individuals and it's specifically linked to employment. So remuneration is what we look at on the payroll. That is where we've got an employer-employee relationship and money is paid from the employer to the employee. We look specifically at remuneration. Again, there's a definition of remuneration we're going to have a look at. There are specific inclusions, which we're going to deal with, such as annuities, retirement fund lump sums, etc. Again, there are exclusions, so items that are not taxable on the payroll. We think there are UIF payments, true reimbursements paid by the employer. That gives us what is called remuneration. From that, we again deduct tax-deductible deductions, which we all know very well, our pension, RA income replacement policies, donations and medical aid on the payroll, which gives us balance of remuneration. Balance of remuneration is then the value on which tax is calculated. And if we take out the pay-as-you-earn only amounts, we get what is called net remuneration. And net remuneration at this stage is the value that is used in our site calculation. All right, so that gives us a background, or just a brief comparison of income versus remuneration. And again, it's quite important to use the correct terminology. So when you do answer your clients, make sure, are you talking about gross income or are you talking about gross remuneration? Are you talking about taxable income or are you talking about balance of remuneration? Also, when we refer to other acts, such as the Unemployment Insurance Contributions Act, the Skills Development Levies Act, those acts specifically refer to definitions of remuneration and income at different stages. So it's quite important to just understand where that all fits in.